BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top traders. If you sign up with the link in the description, you get a free $100 when you deposit $100. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi. Hello everybody, welcome back. Let's get started. A bit of a late morning here. Basically, I was out last night and the rest is history. So let's start off with the boring old stuff. We've got Euro here on the 4-hourly rejection so far on all major moving averages being the 200 exponential and the 10 exponential. So that would mean that we're likely to revisit the previous low. Recognize how the bounce here on the last, I suppose, 4-hourly candles that have closed mimic that of the 4-hourly on Bitcoin, which has been pretty sweet in its bounce. 1, 2, 3, all the way up to 31,500. So, you know, the Forex side of things is still quite relevant. There's so many ways to factor in traditional markets, whether it's Forex or commodities or even stocks, to which direction Bitcoin's going to choose. The idea, I suppose, behind all of this is that they're all so correlated anyway that one will move the other. This is why we always talk about the domino effect, starting with, you know, currencies, Forex, basically euro dollar, because of the inverse nature of the Dixie chart, and then we can think about gold and S&P and all their best friends. But yeah, the correlation to all markets basically start with Forex, which is why I like to bore you to death, which is why I'm always amazed that people make it towards the end of the video and actually survive this portion before we get to the crypto side of things. So long story short, based on what we see on this 4-hourly, the bears have still got a little bit further to run on this downtrend. We could only hope that the 200 simple moving average, about 108.2, is where we're going to bounce from. Again, you know, a descending trend line, we used to think of it as a triangle. We could still think about it as a triangle, but we could also think about it like this, which is a kind of a wedge formation that could be forming. So a descending sort of wedge. So if that is the case, then yeah, a test back down to this area here where we would hit a 200 simple moving average on a 4-hourly is appropriate. So a bit further downside for the euro. That's no big deal. It's only a smidgen. It's a tiny little drop really. But small drops for the euro can be, you know, amplified massively on all the other markets. So obviously with Bitcoin as well. So yeah, range bound still for Bitcoin, range bound for all other assets really that is valued in dollars. Let's have a look at the Dixie just for fun. So the Dixie's now got itself a golden cross on the 4-hourly. You'd like to see that retested and probably a bounce from there. So it's interesting to see that, yeah, there is an inverse move taking place here. So we've got an uptrend on the Dixie, downtrend on the euro, but actually strengthening of trend on the Dixie. And the euro is not what I would confirm to be a strong downtrend, nothing more than what looks like a consolidation. So interesting to see those really, and see who's going to win. Because for the moment, I'm not willing to call either direction for any of them really. I think they're effectively both range bound. The Dixie does look stronger than the others, but remember the Dixie is more than just the euro. We've got to deal with the yen, the pound, and Canadian dollar, US, Australian dollar, the lot. They're all in this Dixie together. So they're obviously struggling more than the euro, which doesn't appear to really be struggling too bad. In all fairness, it does look like a consolidation, which could end up with a bounce and a breakout, in all fairness. So not massively bearish on that. So that right there, you've got through that side of things. Excellent, well played. You've managed to get past the Forex portion. So yeah, S&P basically still relatively decent. 4-hourly very strong. What have we got over here? No bearish divergence on the 4-hourly, so we should only really expect further upside on stocks, in all fairness. There's been a tear up for stocks. No, the bearish divergence over here was cancelled out. So you could probably look for even higher on this. So we keep moving the goalpost really. I'd be very surprised to see us make it up to this level. I'm out of stocks for the most part. You know, I got out. I was mostly in AI tech stocks and things like that, which are actually starting to bounce now as well. These might be considered dead cat bounces. We'll have to see. It does look quite good, but I'm not massively convinced that this is going to shoot back up. But it could. It could. The dollar is still down. While the dollar is down, everyone else can play. So, long story short, the stocks still look good. Forex is more or less stagnant, really. Markets have been pretty boring, given the Independence Day week, I suppose. There's not really much been going on. And you can see here on the Bitcoin chart that it's basically sideways. But with it being sideways, does look good. So we've got the 4-hourly toying with the idea of crossing above the 0 point here on the 4-hourly MACD there, which is good. You can see a nice clean breakout on the RSI, which is good. So we've broken the momentum structure, and it's a decent rally up there as well. Money flow index hasn't got that break, not quite yet. It's toying with the idea of that. But long story short, let's take it back to the daily to apply the same analysis that we've had for over a week now, which is the pump signal that took place on the daily. That's all still in play, where we've not broken down below a 10 exponential, which is good, I suppose. It's definitely bullish. And my expectation is that we will actually, puncture a hole through this resistance, 32,000, and start to trend our way up to, towards 38 at least, to be honest with you, about 38. Maybe a bit of a pit stop around 35. I think 36 is fine. Once this area is broken, I can see how the volatility will basically increase quite dramatically. Big sell walls over here. I mean, and it's suppressing the price, as is the volume. I know that's a lot of volume in comparison to what we used to see back in the olden days. You'd never see $1 billion, but yeah, now something like trading at $1 billion is like everyday trading volume. This is just on Binance. So yeah, again, it's boring, but it's still the same analysis. It's everything should continue to go up, and I still think that the euro, despite coming down by 0.5%, will bounce around there with a good chance of a recovery to a new local high, and that is going to cause a tear up across all markets. Ethereum obviously got its own pump signal here as well, and this is quite new. So the pump signal on the on Bitcoin is several weeks old, whereas this one is only a few days old. So we're looking for this one to run with Bitcoin, and probably quite, maybe even more dramatic than Bitcoin. So I know that there's a lot of skepticism about alts and how alts are going to run. I'm bullish on all alts as soon as we start to see closures for Ethereum above 2000. Again, it's the same old boring analysis. We had our V-shaped recovery on the 200 simple moving average. Pretty sweet, obviously. That's generally what you'd come to expect. We also had the V-shaped recovery on the 4-hourly golden cross as well. So a double golden cross retest there. You can't get better than that, and up and away. Anything scary at the moment? No, nothing. It's just the same as Bitcoin, really. We're looking for the RSI breakout, which we've got. We're over the period of today into tomorrow. Will we receive the positive cross on the MACD above the 0 point? If we do, it should give us enough move to break out from here. So this time next week, I would imagine that all of this will be ancient history, and we'll see some decent tear-up moves. I think the euro is going to play a major role in that. If the euro breaks out or breaks down, obviously that's going to impact all markets, and that's the main thing to focus on. I've got a lot of confidence in crypto. Obviously, I've committed a lot of capital to Bitcoin and some altcoins as well throughout this year, and I'm still in those and I'm holding on to those. That's fine. I've started some bot trades as well, which I think you can still get 30% off at the moment on Bitsgap if you want to do that, but there's other places to trade it, like Pionex. You can do it for free. So bots are good as well throughout this period. It still looks to me very much like a rinse and repeat carbon copy of the previous market cycle, and although it's not going to be neat and tidy, it's more or less the same. So here we go, the first big initial run up, and then a consolidation, and then basically a sideways period. I think we've still got a little bit further up to go before a deeper consolidation, which might take us through into next year or something like that. But for the moment, it still looks like a carbon copy, rinse and repeat market cycle Bitcoin. And just as another little tidbit, I don't know if you noticed it or saw it or even paid attention to it, but BlackRock have now basically come out and said that they see Bitcoin as digital gold and a hedge against inflation across all the world, right? So now they're basically on board saying that. Whether that's a trap that they're trying to lead into the retailers, it's okay. We're BlackRock, man. 9 trillion. We can stick any minute 9 trillion going in there, baby. Look, I don't know. So for what it's worth, they're saying what we've been saying and what everyone's been saying since the inception. So now they're saying it fine. Bitcoin has definitely got a future. You can't deny that. Obviously, Michael Saylor and all these other fanboys are buying it up now. If BlackRock's buying it up and other corporations adding it to their balance sheets, seems inevitable. Bitcoin is unlikely to die a big death. But the more institutional players come into it, obviously, the greater the moves up and down will be. Upon the already well-established market cycle, the 4-year market cycle. We've still got a year to go before the halving kicks in, so we should be going slowly and steadily up towards that halving. And my opinion is that Bitcoin is effectively going to be sideways within give or take a 100% range. So roughly 20 towards 40. That is basically where we're going to go. Right at the moment, we're in the middle of that, what I would consider to be the accumulation range for what is going to be decent in the next couple of years. And you'll look back and go, well, I bought it at 30,000. So be it, you know. It is what it is. I bought 30,000. Obviously, I bought lower than that. And obviously, I bought even lower than that on the previous cycle, to which I still have plenty of that as well. So the store of value, or whatever you want to call it, digital gold or anything, you know, Michael Saylor is a character, but there's one thing that he says which I always like to reiterate, which is that the best time to buy Bitcoin is always 5 years ago. And that's true. That's always been true. I still imagine that to be true. So whether you bought 30,000 or you bought 21,000 or you bought 15,000 or you even bought, like I did back in the olden days, you bought 4,000, you know, it's true. It's a true statement. Do you think Bitcoin's going to plummet back down to 4,000? I don't think so. I'm quite happy to hold all those Bitcoins that I bought back down there. Same with the Ethereum that I bought back down there. I'm quite happy to hold on to all of those. Because the store of value for me is true. And it will be true for you as well. If you were to buy today, for instance, and look back 5 years from now and go, ha, yes, genius move. I bought 30,000 and it's trending over 100 or wherever it is. I'm not here to say that that's where it's going to go, but you can see where I'm coming from. You understand what I mean. Anyway, long story short, it's the same as it was yesterday and the day before and the day before and the day before. We're waiting for the pump signal to play out. We're going to be range bound. We can see drops, that's fine. Drops back down to 29,500 or so, and maybe even lower than that. But basically, any lower than 28,500 would be a problem. Personally, I'd be looking for around 29,700 to be an actual problem, because that's your 21 exponential and your 20 simple moving average being your Bollinger Band bottom. If we close below there on a daily, then yeah, things will get deeper and nastier, and that's where I might start to think about buying more, and I'll be buying more upon these moving averages here, back down to 26, maybe even back down to 25. But at the moment, we're way above all of that, and there's nothing for me to say that that's where we're going to be. I think we're going to trend higher before we trend lower, and that's even when we trend lower, these moving averages are all pointing up. This is perfect uptrend setup, continuation of momentum. We've reset on the money flow index on the daily. The weekly's not even that high either, so the weekly's resetting. You'd only really want to get out for a longer period of time for a deeper consolidation when you start to see money flow index reading above, 90 into the 90s. We've had 97 here, bubble pop. We had 95 over here, bubble pop. We had 90, well, that was a 95 as well, I believe, and a bubble pop. 96. So we're not looking for massive, huge, long drawn out bear market style consolidations that take 4 to 6 months or anything like that. If anything, we're going to be going sideways and up, and at some point we're going to hit 38 to maybe 40 or a little bit higher to be the top of this accumulation range, and then back down again into the 20s. So that is my expectations on the higher term timeframes. And on the shorter term timeframes, things still look good, although 29,700 or thereabouts should be the do or die moment for what could be the next week or so's worth of price action. Not afraid of the price action, not afraid of the pullbacks. The main thing to focus on is going to be your euro, I think, to see how that plays, because if we do start to see breakdowns on the euro below those areas that we've pointed out on the channel, then yeah, maybe everything does come down sooner rather than later. So 108.2 really, no, 108.2 euro. Hope for a bounce around there, and then everything should trend back up again nicely. Anyway, I'm going to leave with you there. Quite a long video, I appreciate a lot of rambling there. If you made it to the end, please let me know. If you didn't, obviously, don't leave a comment, because you wouldn't have even heard the message. Thanks for watching. Take it easy.